we will start. Okay, so I think we're a good enough crowd and we can get started. So once again, and for those who just joined, good evening. It's such a pleasure to be with you at our first regulator session. It's I think it promises to be a very exciting round of activities for you. So thank you for taking out the time, for being here on time. I really appreciate that. And today I'm not doing much talking. In fact, I have a singular purpose for the day, which is to introduce our speaker. We had an earlier discussion and the team felt that we shouldn't just allow Elias to arrive on the call without any pomp and ceremony and just start talking on his own. So the idea is to introduce some level of pomp and ceremony and officially introduce him, even though I know that he's very well known to all of you who are on this call. So for those who may not have had the opportunity to meet me before, my name is Tonya Mutiso Kariuki, and I lead the implementation team for the Bima Lab Africa program. It gives me great pleasure to introduce our guest speaker of the day. And there's two ways I can do this. I can tell you our guest speaker of the day is Mr. Elias Omondi, and he is with FSD Africa, and so on, or I can color a little bit in those lines and share with you a bit more about the individual that I know. So I had the pleasure of meeting Elias, I think it was 2021 when we ran the first Bima Lab. And I remember meeting him and thinking to myself, because my entire career has been spent in the private sector. And I remember meeting Elias, and at the time he was at the Insurance Regulatory Authority of Kenya. And in my mind, like most private sector people, particularly those in the tech ecosystem, our impression of public sector folks and government employees is that, you know, they're these kind of approaching retirement guys who wear bad suits and talk a lot and very slowly. So imagine my surprise when I met the guy who was this young, full of energy individual, and more importantly, an individual who had a real dream. We started off with an idea that developed into a small dream that has since then taken journeys across the continent. So we've run 2 Bima Labs in Kenya, we've run one in Ghana, one in Nigeria, and now we're doing Bima Lab Africa. And I think for me, one of the things that I've learned a lot from Elias is really the power and the might of a vision, a dream, and the energy and the mindset to really execute on that. And so it is really fitting that this first session that we're holding with regulators is a session that's going to be run by a guy who's one of you. He's kind of crossed over into a different environment now, and he's now at FSD Africa. I also think I should notify you that as of this week, Elias's role within FSD Africa has changed. So previously he was a senior manager within the risk and resilience team at FSD Africa. He is now the principal for innovation for resilience. So congratulations, Elias, on behalf of all of us. And for the folks on the call, you know, there's the reactions link there. If you just click on reactions, you have the opportunity to clap for him. And just really join me in congratulating Elias on his recent promotion. So without further ado, I would like to formally invite Elias to take over the session, and looking forward to hearing what the engagements look like today. Elias, over to you.
Right. Thank you very much, Tonya. And it's a pleasure to start this particular session. The way we had envisioned that this particular program is that we are looking at really providing some support, what I would say, technical support, capacity building to the regulators. And this is really, really important because today I will focus on Insuretech, basically where we are coming from a technology point of view, and how that will be able to transition how that will be able to transition within the insurance ecosystem. So it's a great pleasure to be with all of you, basically to discuss some of the key components that will introduce us to insurance and innovation and where the market is at, looking at various trends within the Insuretech component, how these particular components changing. Then thereafter, I'll kind of look at what is basically driving change within this particular ecosystem. And with that, then we'll be able to usher in some key components within the supervision and within the regulatory point of view that we'll be focusing on in the next couple of months. Now, maybe just to give you also a heads up, we've kind of broken down this particular component into 4 critical components. Now, the first component, we look at how innovation interacts with what we call prudential components around the regulatory ecosystem, and kind of looking at what elements of prudential regulations really needs to be looked at, and how does that complement the innovation that we are likely to see in the next couple of years. The second component, we are going to look at market conduct and how market conduct ideally would be impacted with innovation. In key, there are 2 elements in there: the innovation risk, but also consumer protection risks that also will come through as we kind of address what we call market conduct issues that might impact the market. Thereafter, we are going to look at issues around reporting. In this case, then looking at how SupTech, supervisory technology, connects to innovation and how that can be used to support Insuretechs, how also RegTech, regulatory technology, kind of complements Insuretechs, and how can that basically catalyze the growth within the market. Then we are going to look at issues around reporting and also market development. How does reporting components really interact with innovation? Do we really need to think about our reporting standards? What should regulators receive to give them some form of confidence within the work that you're mandated to do as regulators? Thereafter, we are going to come up and look at what are the key performance indicators, particularly when you do so things such as capacity building program, consumer education. How can you track that to give you a reflection on whether those particular components, whether those particular activities are making you meet the key elements within your regulatory work? So today, my work is quite easy, just to introduce what Insuretech is all about, and kind of look at how then these components do interact with those 4 elements that I've kind of indicated that we'll be going through in the next couple of weeks within these sessions that we'll be currently undertaking. I know we'll be sharing more of a detailed plan on how these components will be delivered. We have quite exciting speakers across the period that we'll be working together. Most of the speakers have lots of experience within how innovation interacts with these key components, and that is something that really excites us, that we are going to have real-time, I would say, effect to what we are doing within the innovation. Maybe just to mention, this week we managed to see a big movement in Nigeria. NICOM basically released their initial regulatory sandbox guideline, which is really, really encouraging. We are lucky that we did manage to work with NICOM to set up that particular sandbox, and I know as FSD Africa we are looking into how then we will support NICOM to implement that. I know that is something that really needs to happen, and we are keen follow up to ensure that some of these particular instruments that do support innovation get to the mainstream and kind of enable people or Insuretechs to get into the market and provide those particular solutions that will be are required within the market. So you'll allow me to share my screen. So on what I'll be speaking about today, if you can see my screen, you can let me know.
We can see, we can see your screen. But now it went into presenter view.
Yeah, let me just
Yeah,
stop again and I share.
yeah.
Because I'm connected to screen, so it seems like
Yeah.
it's, so I have to remove my one screen, then.
Yeah, or share that second screen where it's gonna present on.
Can you see it now?
Absolutely, perfect.
Great.
You can see it.
Right, so my discussion today will kind of look at what is Insuretech and what is really driving change. And the reason why I thought that this is important is because as regulators, we are going to basically be, there are various people that are going to come into offices and kind of see and try and give you, you to make a decision whether they should be able to get into the market, whether they are going to meet certain needs within the market. And I thought that it will be very important for us to basically understand and what is Insuretech, because these are key terms that you are going to meet. People are going to knock your doors. Innovators are going to come with one main aim, trying to see whether you are going to be receptive for them to get into the market, at the same time be able to provide the necessary change that the market really requires. And in this case, then I'll be looking at what is driving this particular change, because this is something that is really important. It kind of connect us to the 4 key components that we'll be looking at in the next couple of days. Now, it is important for us to look at it from both sides, from inside, where we are sitting as regulators, but also from the outside. How does it really impact the outside world, particularly if you look at the main changes within the marketplace? So if you look at it from the inside, basically from where you are sitting as a regulator, you are going to see certain components being brought to you. And some of these components will be looking at addressing issues of accessibility. So in this case, then they are trying to come out of traditional channels. So for instance, they're telling you that I don't use agents anymore, but I want to use this particular component or this particular platform to distribute insurance. So in this case, then you'll be able to see that there are a number of internet channels that are going to come your way. And those particular channels will either have limitations, and I'll be speaking on the limitations that you might be wary about, but also in other way, you are looking at it as a very big element of inclusion. So for instance, you'll be able to see that accessibility is something that needs to be addressed. They're moving away from the traditional channels, and they're coming in with these particular internet channels that will kind of improve accessibility. Now, the limitation around that will be things to do with technology. And in this case, then from the outside world, then you'll be able to see tech environment. There are issues around technological risks that really needs to be looked at from a consumer perspective. At the same time, we are looking at issues around technological revolution. In case maybe those particular channels change due to change of technology, what will happen to these particular customers? The second thing that also you'll be able to come across when these particular insurtechs will be coming your way, they'll be coming to tell you that we want to address the issues of credibility, right? We want to make insurance credible. We want to make sure that there is no fraud. So in this case, then issues around, they'll come up with solutions around consumer education, whereby they're telling you like, look, we've come up with a platform that is able to provide consumer insurance education to our customers. This particular platform in one or the other can be able to be used for sales. And in this case, then we are not going to likely to see what we call sales disputes. At the same time, also issues around claims disputes. So issues around technologies that will be used for maybe distribution of insurance solutions. At the same time, technology that will be used to settle claims. So importantly, coming in to address issues around credibility, because again, trust has been a key element within the insurance fraternity. Other forms of insurtechs that will come through are basically coming in to address the business model. So they're looking at creating a seamless end-to-end solution that in one or the other will kind of address the consumer needs. In this case, then the consumers can be able to purchase an insurance product, can be able to add, the insurance company can administer that particular product within the platform. At the same time, the customer can be able to launch claims and so forth. So ideally, coming in to address that consumer need that is looking at an end-to-end type of solution. The second bit is issues around channel management. Some people look at how then they want to use the existing channels and manage that channel from end to end. So more of like, if you think about things such as cell captives and so forth, that basically looks into issues of channel management. Issues around profitability within the business model. Some people will come up with solutions that will kind of look at profit share. Like, okay, if we kind of distribute this particular solution, we want to partner with this particular company, particular issues around profit share. So again, that will be more focused on issues around the business model. Then within that time, then you'll be able to see issues around technology integration. In this case, then tech API is being created basically to address issues around insurance trends, issues around the insurance practices that might not be really compelling to customers. In this case, then integration will be a core component. So SLAs will be quite critical from a regulatory perspective to look at issues of tech integration. So ideally, insurtechs might address issues of accessibility, credibility, business model, integration, and these are the key components that will come your way as regulators. Then outside of that, there are other components that you might need to think about, particularly in the market environment. And in this case, when all these elements come through, the key element will be, are we ensuring that the competition is basically well balanced, right? How do you ensure that the business remains as competitive as possible? How do you make sure that the economic environment is improved in such a way that the market is not kind of realigned to a way that it will be able to impact the same economic environment also, or maybe reduce the level of competition within the ecosystem. So that is something that you will be keen to think about from a regulatory perspective. Issues around technology environment, are we able to address cyber risks that come up with use of the technology? What if these particular technologies change? How do you intend to ensure that the companies that are using these types of technologies are well abreast with those particular changes within the technological world? Again, another thing that will come through is issues around consumer demand. Ideally, once the insurtechs come in, the needs will be altered. The service experience will change, and even the consumer behavior preferences will change. So in terms of how you look at what we call treatment of customers fairly, the way we look at it now will drastically change because their needs will be changed. They'll be more interacting with technology more than human interaction. How then do you ensure that these particular customers still have that ability to really interact the way they used to interact with the companies before? So ideally, customer demand will be based on these particular key elements that will kind of change the way they look at their components going forward. So in that case, then insurance accessibility needs to be improved, and that is something that we agree on. If you look at the penetration, it's something that we talk about every day in the continent. It's still below 3%, and that means that for us to get to that particular level whereby accessibility is increased, then we need to allow some of these particular technologies to come through. Issues around inclusive finance also need to be improved. So in terms of the value chain, we need to look at how that value chain looks at issues around resilience, look at issues around how these particular consumers focus on spending, and basically improving the livelihoods of those particular persons that have maybe purchased these particular products. Issues around existing technological applications also will need to be improved, because again, technology keeps on changing and we cannot really remain at the same place. So for instance, if you've in a way approved a particular technology now, the key thing that the regulator will be asking himself or herself is that what really happens to this company in case maybe this technology changes? Do we have a way that these particular companies that we've kind of approved to provide these solutions are keeping abreast of the changes within the technology that might impact their businesses on one or the other, and maybe leave the customers without any form of protection? So ideally, there's need to closely monitor customer needs, and this is something that you will be keen to check how these technology companies or insurtechs monitor customer needs. Do they provide differentiated products and services? How are they expanding the insurance coverage? Because again, the key intention of why these particular providers will be allowed to the market is basically to ensure that they can really improve the insurance coverage within your countries. So there are three underlying changes that will move and will mean that we need to think about our regulations more keenly. So issues around technology. Technology changes every day. So within the pursuit of enabling these particular companies to get into the market, do they have a clear structure, a clear strategy on how they will manage technology changes, and how does that technology impact the consumers that they have really that have really purchased this kind of particular product? So again, technological risk management becomes a very key component that the regulators will need to look into. Then there's also issues around consumer expectations. So again, consumer expectations will be changing. So that means that issues around market conduct and issues around what we call the conduct risk. I know there's an elaborate ICP that looks at issues around market conduct. I've seen a guidance note being released by International Association of Insurance Supervisors that looks into conduct risk. And all that looks at how consumer expectations keep on changing. And as the consumer expectations keep on changing, there's need to ensure that those expectations are met by these innovators that are going to come your way. Also, another component will be digital disruptors. The kind of solutions that we are going to see might not be mainstream insurance. And most of the time, these particular persons will, in one or the other, interact with digital disruptors. And the key question is then, how do we really have sight on these digital disruptions that might impact our industry? In one or the other, some of these might basically be operating outside what you might have an eye on. And the time will just come that, look, this thing came and has taken what the mainstream insurance companies were doing. So how do we again now follow that digital disruptor to bring him to speed with what issues that they need to address? And I'll give an example. In Kenya, though, initially, the Central Bank of Kenya was not looking at digital lenders, right? And they kind of said, okay, these are just people that are lending their money, and they might not really have any harm to the consumers. But over time, the issues around market conduct came into perspective, and that meant that there was need to look at how then digital lenders are kind of looked at and are kind of supervised. At the moment, insurtechs will come. We might not have a clear way of managing that those particular persons or companies, but as market conduct issues come and there's need to streamline the market and ensure that the competition there is healthy, then again, you might really need to think about how these digital disruptors are brought into the purview. So maybe just to give you some key trends that are basically happening within the insurance fraternity, you'll be able to see that most of the time, there is this what we call new models and personalized products. We've seen customers really looking at solutions that are highly personalized, right? They want to have the insurance at their fingertips. They can change depending on their need. They can basically require other additional benefits because of additional needs. So these might bring in such as things such as pay as you drive. I'll give an example with one of the companies that we were in one or the other accelerating in Nigeria. There's a company called PayU, and this particular company provides what we call comprehensive insurance. You can purchase your comprehensive insurance on a daily basis. Now, that basically sounds very difficult. Like, how can I pay for my comprehensive cover for that day or for that hour that I'm driving? Then pause it if I'm not driving, and I can pause that and again open it later as I'm driving. So how does that happen? Because no, this person is not somebody that drives on a daily basis, and he might need those kind of personalized kind of products. Now, how do you regulate that? How do you supervise that, right? So again, very unique model, and this is all about personalization and new models of these particular products. We've seen AI and automation of claims. It's something that is coming up. How then do you ensure that instead of having what we call the claim adjusters, the assessors, all that is basically assessed through an AI. How do you, in one or the other, approve that particular AI? What are the key elements that you'll be looking at as a regulator to ensure that if a company is intending to use AI to do the loss adjustments and assessments, how does that really compare to what is currently in place? How do you address issues around whereby the customer is not in agreement with the assessment? How does that basically happen? So again, something that really needs to be thought about. We've also seen a number of partnerships coming through whereby the Insuretechs are going to partner with the existing insurance companies. How do you provide these particular companies with authorizations that will support them in these particular partnerships? How is the reporting going to be like? Do you require reporting from both entities, or is only the insurance company that will provide the reporting? So again, issues around reporting of these particular components will come in handy, particularly within the Insuretech partnerships. Then also issues of blockchain, right? Issues around advanced analytics and proactiveness within the insurance fraternity. So I know maybe you've heard of things such as smart contracting, smart contracts, whereby through the use of blockchain, you don't really need to be issued with a policy document, and all somebody receives is a smart contract that is basically held within a blockchain. And whenever there's a claim, then that particular blockchain is basically used to basically honor the claims and so forth. So what happens in such a case whereby you will not be able to ask a customer whether they have received a claim or they've received a policy document, but in this case they'll say, okay, fine, we've just received a smart contract. And in this case, when we talk about smart contracts, if you kind of understand how blockchains operates, somebody will be given a unique number within the blockchain, and as his claim transitions, then that particular number is what he'll use to claim at the end of the period of the policy. So again, how then do you address such issues whereby we might not really require these particular persons to be given a claim for. So those are some of the issues that we might need to start thinking about as regulators when it comes to these particular components. So there are a couple of things, digital economy, whereby we are now using what we call a user-based or demand-based or all-in-one insurance lifestyle products, which becomes more relevant. Issues around robotics. So people will kind of use robots or bots to be, and these will be mainstream, particularly from the front and back office. So in this case, then, as you kind of look at the risks, it will not be about what we call corporate governance, whereby you require the persons to be well conversant and to be well trained. In this case, then they'll be using robots or bots or chatbots to distribute insurance and to manage and to automate policy servicing. How does that happen? And in case there's an issue with the company, who is basically going to be held responsible? How do they ensure that these particular bots are well aligned and might not expose customers? We've seen flexible coverage options coming through, particularly on peer-to-peer insurance, and issues around lifestyle apps that might reimagine the insurer-insured relationship. So in this case, then, more of human-centered design to understand consumer behaviors will kind of lead to more accurate risk assessment. So that might lead to the products becoming much cheaper because the assessments are done in a more accurate manner, and these particular components are basically sold through the apps and so forth. Now, digital models, how do they impact the intermediaries within the insurance value chain? Something that we need to think about. And in this case, we know these particular traditional channels were highly dependent on human effort. And here we are looking at whereby most of the time these particular components are basically sold through technology. Some alarming statistics: 80% of premiums collected by insurance is basically lost through distribution costs. And that's why most of the time, sometimes you ask yourself, why is it that it's difficult to pay some claims, right? Because the cost of servicing and the cost of distributing is quite heavy in some of the areas whereby technology has not been well entrenched. So what does it mean? Is that we'll have more of a personalized premiums. So most of the time, some of these particular products might not really come with a premium rate. And most of the time, from a regulatory perspective, each and every product must have an actuarial certificate. So in this case, then the actuarial certificate will be done through an automated actuary that might kind of be inbuilt in the bot or in the platform. And how then do you do what we call, how do you verify whether that particular premium is right? Because it means that you'll do what we call a use test on such models to verify. In this case, then we know that yes, they'll give us better consumer experience. It kind of improves the brand loyalty and reduces the false claims. But the key thing is that the premiums have to be well computed. They have to be to be arrived at to ensure that the risks are basically taken up. Issues around reinsurers, because we are looking at a point whereby reinsurers will provide risk capital directly to these digital brands. So how does that work? Whereby an insurer acquires a digital component and basically provides capital for these particular brands to carry risk. Yeah. So how does that really reflect to the market? Because we know insurance is all about there's something that has to be ceded to the reinsurer, and within that, then the insurance value chain kind of falls into place. But innovation might kind of alter some of these particular components. Another thing that we might need to think about as regulators is that regulatory frameworks will need to accommodate shorter value chains, right? So if we all know that any product has to take 12 months, what happens if somebody says that, you know, I want to provide a cover that will only be assessed within a week, right? So the period of this policy is 1 week. The period of this policy is a month, and it's renewed after every month. So how does this particular framework accommodate such items with shorter value chains? So some of the key things that will happen out of the components that I was speaking about, and this is what it basically means within the insurance perspective. So as AI and automation will kind of bring faster claims payment, the key thing is that the robotic process automation and AI will occupy the center stage of insurance. Now, there was something that was very interesting. Yesterday, I joined a conversation with the ventures, and one of the ventures was asking, what is the future of work? Will we really need the regulator? Will we need people within the regulatory office to check all this? Does it mean that technology will put us out of work? To me, I don't think so. The only thing is that it will require us to be more, I would say, to have more skills than what we have now. And this is the reason. So if you are basically going to hire somebody that will know how to use the robotic process automation, it doesn't really need to become an engineer on robotics to support these particular components. But the key question would be, is this person ready, able to use whatever knowledge he has and use the Internet of Things to kind of pull in the right code or the data or what he needs to make sure that he meets that particular assignment. So instead of now going for somebody that has IT knowledge, the key question would be, can this person that I'm basically bringing in use AI to complete the task that he will be required to do? So in this case, then the key question would be, will the regulators in one or the other be able to utilize the AI that they might need to manage some of the risks that these particular solutions will bring to them? Another thing that will come up, there'll be new data channels and better data processing and capabilities. And that basically means that you might need to think about AI algorithms to process that data for further insights. So how then do you address issues around new data? How often does the regulator improve their data sets to bring in this new data that might really impact their businesses in the future? Issues around AI intermediation. So that basically changes paperwork. It reduces the cost and time and effort time, effort, and costs that are needed to manage these particular solutions. Issues around bots will become mainstream in both front and back office. So are we gonna likely see a digital insurer? If today a digital insurer comes to you as a regulator and tells you that my front office will all be bots, I don't need anybody in my front office. Also in my back office, I don't need anybody. All that will be run in an automated platform. How then do you approve such particular things? I want to give you an example of a company called Lemonade. Lemonade claims bot. It's called Jim. They call it Jim. Jim assesses and pays out property claims in just 3 seconds. So that's what Lemonade has put within the ecosystem. So that there's this particular bot that will process claims and pay those claims within 3 seconds. How do you approve such a claim management system for it to be utilized within the marketplace? Also, we have an automated insurance agent. It's called SP11 that interacts with customers through a mobile app and other messaging platforms and helps them to purchase right policies. So ideally, there is no person here. What happens in case of mis-selling? That's a big question, because again, what we know, there's clear regulation. If there's any element of mis-selling, this is how we are going to address it. If tomorrow a company tells you that I'm automating an insurance agent, how will you manage those particular risks of mis-selling, and so forth? So again, some of the things that we might need to think about as we see this automation coming through. So what will this mean again to what we are doing as regulators? Is that, you know, we've been struggling with looking at profitability and saying, okay, fine, how do we make insurance businesses more profitable? So the key thing is that accurate determination of risks will be there, because we are using tech to assess these particular risks. At the same time, we might get higher profitability as a market because of some of the areas that premiums are being lost, that is addressed in one or the other. Issues around market competitiveness and newer business model is something that you as a regulator might need to think about. Are we going to create an imbalance as we allow these particular solutions to come into the market? So how do you ensure that there's a market competitive, that the market becomes competitive and these newer business models are aligned to the market competitiveness? Issues around cost optimization is key, within which companies can optimize their costs in a way that instead of losing money through issues around operational inefficiencies, the business becomes more efficient, and in this case, then they can provide better value to these better value to the customer, because if you reduce the operational inefficiencies, then that means that that particular product can be even provided in a cheaper way. So we know that there are a number of things that will come across Insuretech. So telematics, I know all of you have come across that, which basically will monitor consumer behaviors and kind of look at how to accurately measure risk profiles. Issues around smart homes and property insurance, whereby is it possible to really connect your insurance through the monitoring systems and the mobile and so forth. As this movement, then the property is well managed through those particular what we call digital components that have been put in these particular homes and so forth. So we kind of see an evolution of property insurance going forward. Issues around health, particularly on wearables, and issues around AI, whereby you can measure new biometric sensors, you can have smartwatches. I've not heard of a company in Kenya that will use a smartwatch as one of the key drivers of providing health insurance solutions. So what we expect is that we'll look at wearables, how those particular wearables become part of the insurance ecosystem, issues around the AI, and so forth. Now, something that is very interesting, an Australian company was able to settle 90% of the big loss claims within 90 days by deploying drones. So that's how power of technology kind of can impact insurance. So something that we might need to ponder about, how we can deploy technology, particularly through Internet of Things, to address some of the challenges that the market is facing. So some key points to note is that Insuretech is no longer seen as a disruption, but it's rather a transformative force. We've talked about Insuretech as something that is going to change and to change the way we do our business and so forth. It's important to note that this is a transformative thing that will be happening. The second thing is there's better need of risk insights and consumer engagement in driving the transformation. And that basically means that as a regulator, you might need to think about your risk management regulations on how the customers are basically managed. At the same time, look at how consumer engagement is basically looked at, particularly from the regulatory perspective. Another thing is that insurers will invest in key technologies, and these might do with things such as data analytics and mobile, because they might need to support what we call the transformation. But the key thing is that how do these particular companies look into their budget to bring in this form of technologies? The issues, emerging technologies as robotics, process automation, issues around artificial intelligence, issues around Internet of Things, all those particular components will impact the business or the regulatory office in one or the other. Blockchain is now more familiar, and that basically means that is a component that you expect to impact your market. So the key thing is that how then do you regulate these particular components? Lastly, is that there'll be these collaborations. How do you support these collaborations between insurtechs and insurance companies? Something that we need to strike a balance on managing some of these particular risks. We looked at our research, and this is basically with FinTech Survey of 2017. I'm basically tracking the latest numbers, and this is what PwC did. And when they looked at the challenges, there was real need to increase sophistication of data models and analytics to identify quality risks. So the key thing that would happen is that how do you ensure that these particular risks have been identified from a regulatory perspective? How often do they report on these particular risks? Just to give you an assurance that, yeah, the business is operating as required. Issues around sophistication in methods to reach and to engage customers, that is something that is changing. Does it mean that we as regulators are still engaging customers in an old way, or we might need to deploy newer ways of engaging these particular customers? Another issue is around the rise of aggregators to compare products and services from different providers. How do you treat aggregators? In some countries, we've seen the regulator releasing web aggregator guidelines. So, for instance, Nigeria, because these guys are there, and you see that within what the survey is that they are picking up, they're on the third line, and we might need to think about them as people that are going to provide a service to its citizens. The other thing is issues of consolidation of fee as a service solutions. In this case, then you'll get that instead of somebody coming in and deploying the solution and kind of becoming the main distributor of those particular solutions, they'll kind of provide that solution to a company that you have licensed, and this becomes an outsourced function. So in one or the other, regulators might start thinking about the outsourcing requirements and how does that reflect within the business fraternity. Then again, lastly, is this emergence of automated connected cars, autonomous vehicles, and all that will impact claims frequency and severity. So these are some of the key 5 elements that we might need to think about to manage the risks that the consumers might face in the future. So what are the relevant areas of technology within the next 12 months? Data analytics is key. Mobile is a very key component. We have issues about robotics process automation. How then do you look at issues around that? Issues around artificial intelligence, Internet of Things. And all this basically looks at how you can invest in these particular components and provide some better insights. So for instance, if it's data analytics, how do you provide various better insights to the customers that you're engaging? So, and what are the challenges within the insurance component? The key challenge is talent. How do you manage talent? How do you enable data storage and privacy? within the purview of these particular innovations that are coming through. Issues around IT security. Yeah, how do you address those risks that might crystallize? Issues around digital identity and authentication from the regulators. So issues around KYC. And that is something that the regulators might need to think about on issues around KYC. And lastly, there are issues around new business models and regulation. So talent is key for insurers. That's something that we need to be aware of. And also insurers can attract talent by acquiring some of these particular startups. Now, that basically brings me to what we always talk about, the innovator's dilemma. And when we talk about innovator's dilemma, this is whereby the innovator, and in this case, the reason why I'm sharing this with you, because you are that person that will be holding either the success of Insuretech or basically killing those particular innovations. And the reason why I thought that it will be important for us to think about, from an innovator perspective, what does he see? What does he want you to do to help him get that particular innovation into the market? Now, there are three compelling issues that kind of bring innovators to start thinking about these particular issues. So for instance, decision-making and resources is some of the key issues that they might need to get success from established companies. So will you enable them as they kind of make their decisions and kind of push the allocation of these particular resources? Do they still meet the needs of the customers, right? Issues around listening to consumers and tracking consumers' actions. That is something that is key. They need to continually track consumers and track competitors' actions to just get you to know whether you're performing or you're basically jumped off the ship. Issues around investing resources to design and to build high performance, high quality products. And the question is that, from an innovator, if I'm putting all this, will it basically be able to yield profits? So how then do you manage that? So what we need to think about are that either these firms will stumble or fail. And that's whereby they now need to be confronted with what we call a disruptive technological change to basically enable these particular solutions to fly. So for incumbents, what would you expect if there are old insurance companies that are coming your way? Is that the failure to value innovation properly means that these insurtechs can apply to their existing customers and architects, and what are these value chains? So the key thing is that incumbents might have existing customers and product architects, but the key challenge is that how does that really impact what we call product approval? How does it impact what we call market conduct? The other thing is that new technologies may be too new, weak for some, for more advanced, mature value networks where incumbents operate. So if you are bringing in a new technology, you might need to go, or you'll see these particular customers going to a particular front or a particular, maybe they'll go into a certain way in which they look at issues of these technologies. So incumbents might not be really interested, but these new people will kind of come up with this particular solution. So the key thing is that how can they be advanced to these value networks that have been created? Issues around management. You know, if you look at the current companies, they always work on the best fiduciary interest. So, you know, we are here to make profit, and you know, we cannot really commit any investments to these new technologies. And if we committed new investment to these technologies, when are we likely to start seeing results out of this particular technology? So in this case, then there's need to refocus and realign the way these incumbents think and start allowing them to look at more items more keenly. There's also need to moving into new risk markets that has been rejected. Most of the time, you'll get that these technologies might really look at very new markets that are too small, and just basically making change does not really even enable them make any sensible margin. So how does it work? Does it mean that if an Insuretech has been approved, you'll expect them to have some losses over time as they kind of improve their business fraternity? So something that really needs to be looked at. What are these new guys that will be coming your way? The likes of the Insuretechs. Most Insuretechs will be those guys that have been frustrated by their employers or by their incumbents, and they had nothing to lose when they entered their market. So basically what they do is that we are going to create this particular solution, and we are going to kind of see how best this particular solution addresses some of the problems that I did experience in the past. Sometimes they are small, and in one or the other, we don't see them exposing or creating a pause of how it might apply those particular technologies and shift the market. So the key question is that if these technologies found new customers and new entrants, which may in themselves be small and significant, and that basically would change in the future. So you start with new customers, this particular customer is small and significant, and that is what basically translates into the future to make the business fraternity more aligned. So I want to give you an example of a few companies here. And if I know most of you, if you have a laptop, you'll be able to see that there's something written Intel on your laptop, or if in case maybe you're not using an Apple product. So there's Intel there. Then there was a company also called Cyrix and a company called AMD. Now, Intel was literally going to die. And what happens that they had two companies called Cyrix and AMD who are eating into their lower chip market, So if you've bought a machine that has lower speeds, you'll either get that they are written Celeron, and that is what came in as a competitor. So Celeron processors were being put, and these Celeron processors would basically create laptops that were cheaper and would be purchased by the lower chip market. Now, what would have happened is that because Intel realized that Cyrix and AMD were coming to the lower chip market, then they decided to come up and they created Celeron to go to the lower market to ensure that their customer base that would not basically afford Intel would start with Celeron, and as they kind of graduate and get more money and would want better computers, that they would get Intel at the end of the day. So kind of Cyrix and AMD did not kind of push Intel out of the market. And this is what would have happened if, in case maybe Intel did not react by creating Celeron, then maybe right now we might not be talking about Intel. We will be talking about these two companies having gone and created a bigger version of a processor that would now become big products. And that is what happened between Toyota, GM, and Ford. Now, if you look at Toyota, when Toyota went to the US market, Toyota is whereby you can get a car from the cheapest to the most expensive. And Toyota started with very cheap cars across. And over time, people realized that, okay, fine, this car can work for us. So as people kind of started graduating, Toyota realized that now we can move to the upper market. GM, Ford did not, because they had very high caliber cars and all that. And that's why if you look at the growth of Toyota across the world, is something that has been astronomical, because they knew that we start with less demanding customers, somebody that might only need a seat belt. I know you've seen some of the Toyota cars. Seat belt is most precious in those particular vehicles. And over time, you realize, okay, fine, I don't only need a seat belt, I need at least a car that has some good AC. Over time, then, okay, fine, I need a car that has leather seats and all that. And you've seen that within the Toyota family, you can get those high-end cars, and also you can still get these cars that are much cheaper for the purposes of basically looking at that lower market on low profit markets. And that is something that will come your way, whereby some companies will tell you that, look, we are only looking at going to the lowest pyramid, and we want to work this up for the purposes of really managing these particular businesses. At the same time, some bigger companies might decide, okay, fine, we've seen that there's some reaction on the low market. Let's create a particular element, a particular department, or a particular product that will kind of support these particular companies. So within the innovator dilemma, there is always a choice, and you will be part of decision making in this particular choice. One is that the decision that businesses will make between catering for their customer current needs or adopting new innovations and technologies that will answer the future needs. So this is something that also you need to look at when you are going to allow these insurtechs to work. So what are the challenges are they solving on the current consumer needs? And how are those particular challenges, how are those particular technologies going to answer the future needs? Because you want to make sure that whoever is going to come into the market has the ability to remain sustainable. The second thing is that businesses will always be faced with two things, whether they're looking at solutions that are working well, or adopt disruptive advancements that might want to stay relevant. So there's always a predicament, right? Do we pause our innovation and focus on what we have now, or we look at how these innovation will kind of be transformative and be disruptive as we kind of continue to expand the solutions that we are developing? So the question will be, are you going to look at how these particular solutions, the strategies around what will be coming your way for approval, whether they're really looking into these particular components? There's always a problem whereby companies will fail to evaluate the innovation value now. So in this case, then it will be very difficult to comprehend the true value of how these innovations will change in the future. So what is the cost of innovation now? If you look at any innovation, and this is something that you'll be able to realize, is that you look at it from what we call an intellectual property value. So it might not pose a real value now, because in the way innovation starts, the innovations might be weak, they might be mature, they might not be optimized to cost model, and probably not fitting to the existing market and customer structures. But within that, then these innovations will kind of change over time. And that's where deciding whether to allow an innovation to get into your market or to approve an innovation will be very, very difficult because of these particular qualities. The innovation value is so difficult to kind of be able to put a value on. So the key thing is that regulators might need to have what we call the innovator's dilemma, right? What I was talking about. Like, we know, okay, fine, I'm not really sure. I know these things might be, but let us give it a trial. Let us put it on trial. And that's why you see components such as regulatory sandboxes are being created, whereby these innovations can be tested within a controlled environment. As they become mature, and you can kind of create a cost, an optimized cost model around it, and make it fitting to the market, then it can be opened up to the customer infrastructure or the customer structures. So something very important, whereby, yes, innovations will be very difficult to value. The only true value is through test. And that test is basically done through some of the things that we talk about nowadays, the regulatory sandboxes. Disruptive innovations will begin at the foothold. And I've given you two examples, Intel, Celeron, Cyrix, and AMD. And as they kind of start from the lower foothold, that means that they're serving the low margin French customers who have very little expectations. These customers sometimes have very little expectations, and this is something that maybe you've noted. If you've insured, or maybe in your industry, these high-end people have been insured, they can easily really push the companies to get the right value of their solution. But over time, we kind of see these customers that are coming from the lowest foothold of the market. They kind of have low expectations, so they're not demanding as other customers. So as they kind of graduate and realize the value of their products, they can now improve the risk solution that they have. They can increase their premiums, and they now become more enlightened. They become more demanding. So the key thing here would be how then to ensure that these particular customers are protected, because the expectations are low. If they're not paid, they'll say, it's okay, I'll wait for them next time. They won't go to court, they won't do much. But how do you ensure that they are well protected? Because the systemic effect at the lower of the foothold kind of customer might have a very big repercussion as compared to the other customers that are well enlightened, are purchasing products at the highest components. So this is something that might come, or you might come across, particularly when you will be looking at some of the innovations. And we usually call it technology life cycle. And the key question is that somebody will ask you, will tell you that, we want to take this particular technology to the market. The key question is that, have you done an R&D? Yeah, so, and that is where all the innovations might start from, whereby they've done an R&D, then they kind of grow between A and M. A and M is whereby now that solution goes to what we call the sandboxing or the testing stage or the piloting stage. Then once it reaches maturity, the customer should, or the institution should kind of think about, how do we push it further than that? Most of the time, if this particular technology or the innovator is not keen, then this thing again crashes and comes to zero. So there's always need to kind of reinvent that. So between L and L1 there, you'll be able to see that there's need also to redo what we call an R&D again in there, to see whether you might improve your innovation life cycle. So again, it's something that will be important to understand from the customers. How do they intend to ensure that their technology life cycle is not really declared redundant over time? And maybe if it's declared redundant and there's no vitality of life in the technology, then it will mean that the customers might be exposed or might move to other products. There's always a book that I usually advocate. It's called Innovator's Dilemma by Clayton Christensen. It's quite an interesting book that looks into two compelling graphs. Now, there's a graph we call sustaining innovation, and there's a graph we call disruptive innovation. And from the continent perspective, what we are likely to see is what we call disruptive innovations that might surpass sustaining innovation. And I'll give a very crude example. This is just my example. Don't quote it anywhere. I know most of you know how the kind of gadgets people use in Africa. So I know some people have iPhones in this particular call. And what you've realized with iPhone or such particular brands, they do what we call sustaining innovation. So over time, they improve their products because they're operating from what we call the most demanding customer. These customers demand that I need a phone that will be able to do 1, 2, 3, 4, 5. And over time, they increase those features. And that is something that has really helped the Apple brand because they know how to sustain their innovation. They know how to make their demanding customers more receptive to what they're bringing. And always you'll hear somebody saying, okay, fine, which iPhone are you on? Is it iPhone? I don't know where we are right now. Is it 16, 14? I don't know. I'm not an iPhone person. I hope I'll get there soon. But ideally, you'll see how they sustain those innovations. But there are these guys that are very disruptive, right? They kind of start from the least demanding customers and they push those least demanding customers towards the sustaining innovation. And this is where we will be in the continent, whereby we want to make sure that these least demanding customers kind of start getting the solutions that will push them towards for them to now start becoming demanding customers. So think about incumbents as those particular companies that are working on sustaining innovations graph, and think about Insuretech coming in with the disruptive innovations graph. The point of change within the continent perspective will reach when those two particular graphs will intersect. And this is where by now you'll see some of the Insuretechs or these innovative products or companies will now be attracting even the mainstream customers. So these customers will ask themselves, like customers that were basically on the mainstream insurance solutions, they'll say, why should I continue being in this particular company that takes 30 days to pay? Yet I've seen that there's a product that now resonates with my needs at that particular point, at that particular second intersection between the most demanding customers curve and the disruptive curve. And so, okay, fine, I can still buy that particular product from this particular company. So let me just then move and operate with this disruptive kind of a company. So something that will kind of reflect on various elements that we might need to think about as regulators. So there's now the need to turn the change that we've seen into opportunities, and that is something that is quite key from a regulatory perspective. We are agents that can catalyze the market, and we've seen various elements and how these innovative elements will play within our ecosystem. So we know that insurance companies are grappling with tough new business, right? And whenever there's a business, the only key element that people mostly is happening within our markets is that you reduce the price or you provide a discount to get that business. And most of the time, this business is moving from point A to point B. Another thing is that investment and regulatory environments that are emerging, we are having new investment solutions. The investment market also is becoming quite tight. And that basically means that there is need to look at how innovation can be part and parcel of solving these challenges that we are facing, both on the investment side and on the regulatory environment side. Demographics are changing. If you looked at the average age in Africa, I think our median age is around 19 years. in Africa. And that basically means that there is rise of power in terms of how these emerging markets will push the types of solutions that will be sold within the marketplace. Consumer behavior is changing, and this is whereby you've seen customers are now becoming more enlightened. And with an enlightened customer, then it means that there's need to look at how innovation is entrenched and how then that innovation really meets his needs. So how then do you ensure that the innovators basically meet the needs of these particular customers? The number of drivers and factors, and that kind of moves from socio, economic, technology, environment, political. And these are some of the factors that you might need to think about from a regulatory perspective. So if you look at the social factors, there's balance of power towards customers. So they are getting more power, consumer behavior, talent drain, stakeholder trust, issues around CSR. So all that is kind of giving more power to customers. Technological advances in software and hardware will transform a number of components. So think about issues around big data, and that will lead to what we call the actionable insights. Issues around environment, and we cannot overemphasize this. Climate change, issues around sustainability, and these will give rise to sophisticated risk models and risk transfer solutions. How then do we ensure that as regulators we incorporate and basically approve such decisions? Economy, I wouldn't stress that. I know we all are bearing a brand of the economical issues. So there's rise of economic and political power in emerging markets, issues around fiscal pressure, inflation, all that in one or the other impacting the marketplace. Issues around political issues, harmonization, political regulatory reforms, capitalism, tax treatment. If you talk about tax, tax is increasing in one or the other, globalization of the insurance market and so forth. So some of these issues will really impact the way we look at solutions, and in particular technology. So as you think about the solutions, there's some focus areas that you might need to think about as regulators. So if you kind of divide an insurance office as you regulate these particular offices, those red components is where you might need to kind of think about in more detail as you entrench innovation and new product innovation and analytical decision making. So innovation, companies are going to set up innovation hubs. Companies are going to look into different channels of distribution. How do those particular channels and innovations that they are putting in place aligning to the regulatory elements that you will be providing? Other issues are growth strategy, marketing, sales distribution, and products and services. All that will now play into those two channels: innovation and distribution channels. Now there'll be a big disruption within the middle office, right? This is where everything will be disrupted, and there's need to relook at how you supervise the middle office. Operations are going to change because the business models are going to change in one or the other. The use of technology, how do you ensure that if you are managing or you are doing a risk assessment on the middle office, are you checking on issues around technology? Information, how are they storing information? How are they looking at privacy issues, consumer data protection or data protection and so forth? So the middle office will be the key area that will be highly disrupted, and there's need from a regulatory perspective to look at those three components. When it comes to the back office, underwriting and risk management will be impacted, because here it will be done through softwares and bots. Issues around claims and benefits will be highly automated. How do you ensure that people get the rightful benefits? Issues around asset liability, much as you kind of bring in the money comes in from the underwriting and the claims are paid. How do you ensure that these particular amounts are invested in a way that they can well be aligned to the automated systems that are basically paying for these claims and managing the risks that are in the business? We wouldn't see a lot of change in finance, but the key thing is that these three elements will have a drive on finance. So finance will, in one or the other, see new technologies to support those three areas. Capital management will be important because, again, as you look at the asset liability and what risks will be underwritten and what claims will be paid, then there's need to ensure that there is that connection in those three other components. And even human resources, how do we manage use of technology? Will people be redundant, or will they need to improve their skill set? So again, looking at the well-being of the office. So I wouldn't really want to go into much detail on some of the key questions that you need to think about. But the key thing here is that you need to think about the CEO, some of the questions that you might need to ask. Who do you task in shaping the response to all this change that they're talking about? So if you go to the CEO and they're talking about change, you need to ask them who is going to drive this innovation and how will they respond to the changing market? How do they decide which markets and countries that they target? How they prioritize their investments and build their capabilities to survive? Again, some of the key critical areas that a CEO of an organization that is looking into innovation should be able to address. When you talk about chief risk officer, you need to ask these guys, how well is the risk management embedded in the organization, and how comfortable are they with the risk assessments of the new products, new services, and new distribution channels? How are they prepared to take in what we call the extreme events? There's need to make sure that, again, they are well aligned to knowing that these things can go wrong within the marketplace. Issues around chief marketing officer, this is the guy that will pick the product and go with it into the market. The key question will be is that how will they transform the organization to customer-centric organization, and how is this particular products capable to be tailored to meet the customer changing attitudes and behaviors? Because it's not only about distributing products, but the key element is that how does it really connect to the changing attitudes and the behavior of their customers? The chief technology officer, the CTO, how do they ensure that the organization is aware of the emerging, it's not only aware of the emerging technology trends, but also is actively experimenting new technologies that they come into the market? Because as we said earlier, technologies keep on changing. The key thing is that how then do they ensure that these technologies are not only remaining at one point in the time? Issues around chief information officer, how do they build an information advantage? So again, issues around the big data, issues around insightful data, issues around how this can become a cost-effective technology platform. So a very critical element that can be able to be you can be able to ask as you kind of engage these particular institutions. From the head of actuarial perspective, they need to ensure that the price is selected, and that particular price is based on the risk appetite. From the underwriting, you need to think about what are the sources of information that they use to better risk selection and pricing. From a claims perspective, how do they transform the organizations to pay claims and managing the losses based on real-time data and loss management techniques? And from the HR, because there are people who will be attracting talent. How do they ensure that they maintain and attract the right talent as they manage these particular innovations? So just to conclude, because I know we need to have some time for some questions, is that when we look at insurance industry, we know that we are that particular brink of revolution, which basically means that the Insuretech is entering a new phase. The key question is that there are no quick fixes within the insurance business, but the key thing is that these particular issues need to be adapted. Insuretech require transformation from a policy-led industry to one that basically looks at placing the customers at heart. And within that, then there are 4 key elements that as we work as regulators, we will be focusing on, is that there's new way, we need to look at new ways of doing business. In this case, then how do we allow these innovative approaches to get into the market and allow companies to adopt them? How then do we move beyond the comfort zone? And this is the most difficult bit because, we might say that, okay, fine, this thing cannot work. We just better go on with what we've been doing as a regulator over time, and the customer will be exposed, or the customer will not get the right value. So there's need to basically move from that comfort and see how then we can build a customer-centric architecture that will support the insurance customers in your market. There's also need to transformational leadership. How then do you as leaders really embrace this change and look at how then people or businesses can benefit from these particular opportunities? And last but not least, it might not be done on a solo perspective, but there's need to look at how you can really catalyze partnerships, particularly between companies and the innovators within the coming years to become part of change within the ecosystem. I'll stop there. Thank you very much. And I'll now make it open. I'll stop sharing my slide. Let me just stop that and then see what we have in place. Thank you, guys. I'm happy to pick a few questions. Right, so is Tonya here? Tonya is usually good in managing questions and answer, or she left?
Tonya stepped away. She had another call that was starting at 6 p.m, so she had to step away.
All right, yeah. So I don't know whether there are questions. You can put them on the chat, or you can ask Salma.
Yes, hello everyone. Thank you very much, Egat, for this very excellent presentation. It was really useful. I had one question about the innovators in the markets. I read in one of the slides that usually innovators, they come from incumbents, traditional players. So usually they are actually ex-employees in incumbents or traditional players. Does it mean that does it mean that we need to that in order to make innovation happen, does it mean that we need to have a communication plan to put and to target those people that are in incumbents, so that we can make them put on their own project, or get away from their their jobs and decide to build a startups. Does it goes that way in the different markets where innovation takes place? How do we push them to go to entreprendre, to open up their project and to start an innovative project?
Yeah, thanks.
I don't know if I was clear, but
yeah, you are clear. So this is the key thing that I mentioned. You know, what we've seen in the past is that most of the time, the innovators mostly come from incumbents that are employees that are disgruntled in maybe the way the processes are happening in there, and they know that the customers are being frustrated in one or the other, or this is how these particular solutions are. So ideally, from the business perspective, you'll see most of the time the innovators will in one way come from this particular type of companies. It doesn't mean that innovators cannot come from other companies. They can still come from other companies. They can come from even companies that have not been in that particular line of business in one or the other. So that was just an example whereby if you look at most of the innovative companies that we've kind of seen, they kind of come from those particular employees that may be left and a mainstream company. We are not saying that we are going to pull them from these companies, but they already understand the challenges that are across the value chain. Now, for those new innovators that are within the Insuretech side, that's why we are having programs such as BIMALab to support them, to give them some technical support, to enable them understand the challenges that are in the market, because we want them to know that these are the challenges. Some people will come from where the challenges are, which basically means that they're coming in from the incumbents. Some people will come in from a different field altogether, but there's need for them also to understand the challenges that are there. So that's what I meant by that. So it doesn't mean that they must only come from the incumbents, but if you get an Insuretech that is being started from somebody that is coming from that line, they tend to understand where the roadblocks are, and they would really want to address those particular issues because they come from an understanding perspective. Thank you. Right, so it seems like there are no more questions. I'll pass it back to Alex. I'll be able to, all right.
I have a question.
Yes, Khalid.
Okay, thank you. Good to hear from you once again, Mr. Elias.
Thank you.
Yeah, please, my own question is going to the regulatory perspective. Yeah, because I see technology and innovation are flexible and dynamic. So I don't know, how do you approach them in the regulatory perspective aspect? Like, how do you make your regulation flexible to suit those innovation? Because innovation cannot wait for regulations. They are always striving, and also innovators are always creating things and that suit customized perspective. But regulation is always at the back. Sometimes to achieve that is difficult because it takes time to create, to come up with policies and this. So I don't know in other jurisdictions where those innovation and those insurtechs strive, how do you come about that? That's my questions.
Yeah, so thanks for that. And this usually a very difficult question, because one is running on a different element. So for instance, innovation will always run faster than regulations. And regulations are just a set of standards or principles that an institution needs to adhere to. for that particular institution to operate within the market. Now, there's something that I want to make. There is no silver bullet to address regulatory issues that innovators face. And one of the key things that most people think that innovation and technology will be addressed by regulatory sandbox from A to Z. That's not the case. That's just one way of addressing innovation, or basically allowing innovators to start settling in. So it's beyond that. Whenever you want to create responsive regulations, there are different elements that come with it. The first thing is a team. Is there a team within the regulatory office that will have sight of these particular innovations, just to acknowledge that, okay, fine, there's an innovation that has come our way, and this particular team will be able to provide guidance on what next, what needs to be done. So are we going to take it through a regulatory sandbox route? If elements within the regulatory sandbox does not address, does it mean that we need to think about no objection as we develop regulations? So you kind of follow the mode of creating a letter of no objection, and that basically means that you need to check on within the Insurance Act. Does the commissioner have rights to provide or basically to issue some of the leeway to these innovators to operate within the market? So is there any section within the Act that gives such powers? So that basically means that if that section is not there, then within the regulatory sandbox, do you have a section that can give powers for you to give some no objection for this particular innovation? So what I say is that you'll not be able to create a regulation or a law that will be A to Z. The key thing is that, do you have a regulation that will be able to go with the heartbeat of innovation? So in case there's anything that is needed, there's a team that provides clarity on that, and there's a willingness to either pass it through a sandbox, to pass it through a test and learn, to pass it through a letter of no objection, to pass it through a letter of partnership, or whereby you can even allow them to partner with an existing. So all these components have to be brought into play. And the key thing is that a team must be behind it, or an office should be able to support it. The law, in one or the other, can provide some clarity or avenues to support it, and just basically being flexible. So it's the regulator being flexible. It's not about the innovation being flexible, but the regulator becoming flexible and providing necessary guidance. Just to repeat, innovation will not be addressed 100% by the regulatory sandbox. The regulatory sandbox is one of the instruments. The other thing that basically needs to come through is a team. Other things that need to come through is that, is there a way to provide no objections? Is there a way to provide letters of partnerships and letters of no objection? Is there a way to kind of have oversight on these particular innovations as you allow them to get in the market? Is there a way to allow for pilots and so forth within the regulations that have been set at the regulatory office level? So as we kind of build the regulations over time, there are all these instruments that have to come into play, and the spirit is with the people. These are instruments, and the key thing is that, are the people within the regulatory office ready and willing to see some of these innovations getting into the market?
Hi, Elias.
Hi.
Nice to see you again. I have a question about if you are talking about a technology or an innovation, but it's not innovation anymore in developed countries. Yani, for example, if we are talking about KYC, it's already there in the developing countries, in Europe, in USA, Canada, etc. And an innovation and a company in Insuretech delivered application or for application in KYC and using the application using the KYC. The sandbox in African country, should it not giving him into the sandbox as the KYC is not innovation anymore in developed country, or he should take the path from the beginning and testing the KYC and see if it's giving any risk in the market and so on and so on. What do you think? The sandbox should accept to test innovations that's not innovation anymore in developed countries, or no, he shouldn't accept?
Yeah, thanks. Now, that question is good. And I know we'll be looking at it in more detail as we get across the classes. Now, from the sandbox perspective, there are different sandboxes, by the way. And each and every sandbox intends to meet a particular objective. So for instance, we can have what we call a policy-themed sandbox that in one or the other is looking at addressing the policy issues that are within the law, and you're looking at how you can enable flexibility around the law. There are sandboxes that are themed. In this case, they can be innovative, so they can only be looking at, okay, fine, this sandbox is only allowing for blockchains. So they are only attracting blockchain technologies to come into play. So in that case, they don't allow any other thing apart from blockchain to get into their ecosystem. So there are different types of sandboxes, and we'll be able to look at that in detail. Now, you've kind of asked whether kind of looking at the KYC, KYC is no longer an innovation, and maybe might not go through the sandbox, and that will depend on what type of sandbox as your regulator set up. In Africa, mostly, the sandboxes are looking at themes around financial inclusion. So they want to increase uptake of insurance, and they're looking at solutions that will kind of push for that particular uptake. It will mean that the solution might be in existence, but the way that particular solution is kind of being put into play will significantly increase and improve financial inclusion in one or the other. So most of the time when solutions are being allowed into the sandbox, there must be a criteria. So that criteria has to be set within the sandbox regulation or guideline that for you to be accepted within the sandbox. These are the key elements that you have to demonstrate, and within that we'll be able to allow you to either get into the sandbox or not, depending on the criteria that we've put in place. So, for instance, if the criteria that have been put in place will allow that KYC to get into the sandbox, then that it will mean that it has passed that particular test. Something significant about, again, around the sandboxes is the reason why the reason why you are creating the sandbox, and we'll go through that particular process. There must be a reason why a sandbox is created. Organizations or regulators will not just create a sandbox because it's a thing of the time. Some people might just decide, okay, fine, for us, we don't need to create a sandbox. But for us, we might just need to give a letter of no objection, or to give to allow a test and learn whereby we just require them to kind of give us some information on how that thing is working. So that is something that will come, will depend, and will kind of go through the process of creating a sandbox. And maybe if some people have already created a sandbox, then you'll kind of take it through that and see, okay, fine, is our sandbox really meeting its intended purpose? The biggest risk within the sandbox is what we call the market players circumventing the law. So some people might see it's an easier route to take their solutions through the sandbox rather than ideally going through the main channel. And this is the reason. They get that it's easy and cheaper to circumvent and go through the sandbox rather than basically going through the whole process. So that is something that can be addressed by the sandbox having what we call areas that cannot be relaxed. So for instance, issues around AML, issues around consumer protection, issues around data protection, some of that might not be relaxed under the sandbox law. You still want to make sure that fit and proper people are within the business. The management is well conversant with what they're doing, so that, again, the threshold of corporate governance and AML is well addressed. There are some laws that might be relaxed. So for instance, you might relax issues around capital entry, whereby you might require them to bring what we call capital up to a particular level that of the risk that they're going to undertake. So again, another element on legal and regulatory diligence being conducted by these particular players to ensure that there is no element of circumventing the law in purview of passing some of these things through the sandbox. But we'll be able to go on these issues through more detail within the next components. Eduardo. I think we can't hear you. We can't still hear you.
Edward, if you're having difficulty speaking, you can probably type your message into the chat. That might be helpful. Any additional questions as we wait for Edward to share his question with us?
Right, so I hopefully we'll get that question from Eduardo. So thank you. I'm seeing good messaging from the chat. Thank you, Eunice. Thank you, Mohammed. Thank you, Dr. Ankara. Thank you, Hamid. Right. I think we've lost.
Yeah, I think
we've
lost Edward. Elias, I just want to take the time to say thank you to you for this very exciting session that you shared with us today. We've gotten a lot of takeaways from that in terms of just understanding the changes and the challenges within the insurance industry. You've talked to us about the innovator's dilemma, and then you shared exciting examples in terms of when you talked about what was going on with Toyota and what was going on with Intel, which is something that I never knew. So that is something very interesting, and I want to say thank you for that. To the delegates who managed to make it here today, thank you so much, all of you. We know that to our colleagues in the west side of the continent and Central Africa, this was during your work hours, but we're extremely thankful for you taking your time to come here and join us today. If anyone else just has something that they would like to add, The floor is yours. But Elias, again, thank you so much for this session and for today.
Thank you very much. I'll share the slides, and and Alex will be able to share them with
The
you.
recording, yes.
In case there's any question, let me know. Thank you very much.
Okay.
All right. Thank you, guys. Bye for now.
Thank you.